Guys, how we doing? I'm just coming on to do this week's live, and I'll wait and see if anyone jumps on just for 2 minutes. If nobody jumps on, then we will just crack on with the live. So in this video, if you're watching this from YouTube and you're not really familiar with what we do, I'm Ryan Mack. I'm a time-served trader. I've been trading for 9 years now. My first 4 years where I learned how to trade was with a large company in Asia. Now I trade managed accounts for various different brokers known as PAM accounts, and I have a trading group. I am a full-time trader. I have been for 9 years. And now we have this Discord group you can see right here on the right hand side of the screen, where we teach people how to trade, exactly what we do. But myself, I am a swing trader, heavily based on fundamental data. And I simply trade from areas of value. That is it. Anything outside of these areas, I don't touch. I don't bother getting involved. The next one for oil is going to be here, taking it a buy, heading north from here. We were in this sell. I get stopped out at around $5.5 profit. But if still in now, that'd probably be about 16, 17 grand that trade, which would have been nice. Let's see. It doesn't look like anyone's coming on, which is fine because this is a bit of impromptu. I do this every week. Sometimes I do it on a Saturday. Sometimes I do it on a Sunday for the guys. I'm just doing it today, Saturday, because I'm at home and I'm not doing anything. So why not kind of free up my Sunday, right? Tomorrow. So what we do today is I'm going to run through the fundamental data from last week. We're going to look at next week as well, what we've potentially got coming up. If you're watching this and you want to get involved, don't forget, get your notepad out, and you want to be writing strong, weak, and neutral, okay? And now I know you're probably thinking, why wouldn't you write strong, neutral, and weak? It's because you only want to trade strong economies. I don't want to say currencies, but yeah, economies against weak economies, right? Can you trade strong with neutral? Yes, you can, but you just get more of a kind of slow trend, up or down. It's very, very slow and boring. It's a bit like trading pound USD. It's shit, right? Euro USD, also very shit to trade. It's like watching paint dry. So I don't bother. I don't trade strong on strong, weak on weak, neutral on neutral, strong on neutral, weak on neutral. I don't trade any of that. All I trade is strong against weak. That's it. Because then you get the biggest moves and you get the moves that just run and run and run and run. It's a game of probabilities, right? So you want to have the probabilities highest in your favor. So the reason why I do strong, weak, and neutral is because at the end of this, when you've got, pound, USD, euro, CHF, whatever, at the end of it, you then score out whichever currency pairs are neutral, and then you match up whichever currency pairs are strong to weak, and that's how you know what pairs you are looking at for the week. All right. So let's get started. I go through each pair individually, except from Aussie, China, and New Zealand, because they're all very closely correlated, okay? So let's see what we had this week. We always do this week, and then we'll do next week. I'm going to teach you how to do the numbers as well, so stay with us. Let's have a look. GDQ, quarter on quarter. Let's see if that's been going up and down gradually. It's not very good. It's kind of stable-ish, but numbers are just kind of bouncing around, right? It's not very good. Industrial production year on year is down, just slightly down, 0.3%. The reason why this is green, I know I say the same stuff in every video, guys. That's on purpose because you're just making a habit on, every single week that you do this, you're building that habit of reading the same stuff, right? So I know I say the same stuff. It's because it's based on this data, right? So, and I never know who's watching one of these videos for the first time or who's watching it for the 10th time. You know what I mean? And either way, it doesn't matter because you still want to build these habits the same every week. If you're not doing this stuff, right, every week before you start trading and writing down the key pairs or metals or oils or stocks or whatever it is, and you're just going into your trading week and you're drawing stupid fucking lines on your page, you're not going to consistently make money. You will win the odd trade, but I guarantee if you look at your record, you will not be consistently making money. It's just it's impossible. You can't do it. Industrial production year on year. Let's have a look. Obviously, if you're a scalp trader, that's different, right? I'm not talking about scalps. Industrial production 5.3. So that's down. The reason why this is green, yeah, you might be saying to yourself, why is that? Why is that green? Surely green's a good thing. It's green because it was previously 5.5 and now it's 5.3, right? Which is not a good thing. That's bad. But the forecast was 4.9 and it's come in better than they forecasted it. So that's why they've coloured it green. All right. Forex Factory is pretty shit. The best one is actually this, Trading Economics. Whenever a scheduled news event comes out, like if that says like 1 p.m., the minute the clock strikes 1 p.m., the numbers will be out on this. It's absolutely phenomenal. Whereas this takes about 5-10 minutes, and you get far more information on Trading Economics. I only do it on here because it's much easier on the eye, and all of you guys are more familiar with this, so it's easier for me to run through it with you. All right. Let's see. So we've got retail sales down, unemployment rate same, static. NZD quarter on quarter is down. Employment change for Aussie is up because Aussie is strong just now. Yep, Aussie's doing very well just now. Unemployment rate is just increased by 0.1, but the employment change, the positive upside, has dramatically increased, so that's good. So why we look at all three together, right? The Chinese economy massively affects the Australian economy. It does affect New Zealand, not massively, but it does have a big effect, and it does have a huge effect on Aussie. Okay, so write this down. If all the numbers for China are good and the Chinese economy, which means the Chinese currency, is strong, it means the AUD will gain strength from that. So Aussie will become extra strong. So if AUD is already strong and China is strong, that's good. That means like AUD becomes kind of super strong, right? It gives this kind of boost, this little turbo, if you like. When Chinese yuan renminbi is weak, Aussie dollar is weak. Because I'm not going to go into the explanation of why that is. That's a whole fucking lesson on its own, right? That the Aussie dollar then becomes weak if Chinese yuan renminbi is weak. So you have to remember that, okay? Likewise, you also have to take into account when trading AUD and USD, is that if USD is strong, AUD is weak. If USD is weak, AUD is then strong. Okay, so again, you have to remember that before you start to enter AUD pairs, or when looking for your entry, right, on AUD pairs, you have to also check China and check America. Right, so we know the news for this week. Let's have a look at next week. China, 1 year low, right, we don't mind. AUD, flash manufacturing PMI. We want to have, so here's a good one, right? Try and remember this or write it down if you can, okay? Every single country / economy in the world has flash manufacturing PMI and they have flash services PMI, okay? Now, depending on which, we want to care about both of them, but we always want to care about one of them more than the other, right? We want to care about either manufacturing more than services in a particular country, or we want to care about services more than manufacturing in a particular country. And I'll give you an example. So Japan isn't a services country. If Japan is below 50, right, I'll tell you this as well, anything from 50 upwards is bullish, okay? 50 above is bullish. Anything from 49.9 below is bearish, okay? So why is that important? If you look here, let me just open this and see if you can actually see it. No, you can't actually see it in terms of data. Okay. So when you look here and that says 51.2, right? Let's just say the previous month before it was at 54, and now the numbers have just come out and it says 51.2, and previously it was 54. Yes, it means the numbers are getting worse, right? But people that don't understand what they're looking at will say, oh, bearish, so that's now bearish. No, it's not. anything above 50 is still bullish. It just means if it's decreased from 54 to 51, it simply means that things are slowing down, right? And then the next time it might go back up to 53, but it just means in that particular period where the PMI has been posted from, it just means that things are slowing down. Just because it's went from 54 to 51 or even 58 to 51, it does not mean bearish. And many people get confused with that, okay? It's still bullish until it passes below 50. So, back to Japan. Japan, of course, it has services, but it's not a services country. It's a manufacturing country, right? Everybody knows Japan is a manufacturing country. China is a manufacturing country. Germany is a manufacturing country. The UK is a services country. France is a services country. They're not manufacturing countries, right? So you can kind of see where I'm going there. So what I mean is, so in the UK, you really want to care about, you want to care about both. I'm not saying just ignore manufacturing in the UK. Absolutely not. They're both important. But if manufacturing is below 50 in the UK, we don't really mind. We don't really care, because we already know, as a world, the whole world already knows that the UK is not a manufacturing country, and therefore we do not expect manufacturing numbers to be high, right? Because it's not our bread and butter. Our bread and butter, how the country / economy makes its money, is from giving out services, right? So with Japan, it's the opposite. They don't really have services, but they're a massive manufacturing country. So that we know when we look at services in the Japanese yen, we take it into account, but we don't really care if it's not above 50. We expect it not to be above 50 because they don't really provide services. So how could it be, you know? But we do care if the manufacturing is low because it's a manufacturing country, okay? Let's see what else. AUD Flash Services PMI. So yeah, we do have big news for AUD next Wednesday. We'll keep an eye out for that. So for me, and now at this point, before you go into other pairs, you write down in your notebook which is strong. So for me, AUD is still strong. NZD is weak. And of course, we don't write down China, right? Because we don't trade China. We just use it because it gives you essential data and very important information about what can possibly happen with the AUD. So that's why we use it, okay? Let's go back. Let's now get on to the Canadian dollar. Let's see. CAD, manufacturing sales, down. Wholesales, down. They're month on month, so you take it into account, obviously. But year on year is the one that really makes a big difference, right? Housing stats, down. CPI month on month, down. Median CPI year on year, down. The Canadian dollar's fucked. There was a guy last week said, "Oh, Canadian dollar's going to fly." No, it's not. It may go up. Yes, it absolutely may go up. But when it goes up, that's the manipulation phase when all the big institutions get up to take it up, and they'll take it up. You'll see it moving up dead slowly, boom, they'll take it up because it's got no strength. The economy's fucked, so nobody wants to invest in the economy because it's high risk, which means if nobody's investing in the economy because it's high risk, because all the numbers are fucked, it means the economy's shit. It means the currency's shit, right? The currency's weak, so you wouldn't be buying Canadian dollar unless you're fucking a maniac, right? But does it mean it's not going to go up? Of course it can go up, but that going up is the manipulation. That's not the real move. If you want to, you can do a counter trend trade, absolutely, and you can take bullshit moves with low probability, high risk, and you can take them against the economic data. You can absolutely do that, and yes, you can make money do it. I'm talking about if you want triple A setups where the probability is always in your favor. Doesn't mean it's not going to go against you, but the probability is always in your favor because you're stacking up an economy which is super strong against one which is super weak, and then you're marking it up with making sure that the price is in an area of value, right? This is essential. The price must be in an area of value, and this is why, I'll show you right now, this is why Canada CHF. There you go, it's melting again. However, right, look, you need to wait for an area of value. Up here is a fantastic area to sell from, right? Down here, you would never sell from it, even although the Swiss franc is performing much better than the Canadian economy. You just would never, you would never sell from down here. It's dog shit. You want us to be selling from here, from here, from here, or from here. These points only. Anything outside of you could probably do from here as well, but you get the point. Anything from here, this area here, this area here, this area here, anything outside of those points you don't want to be selling from. So that means that even though the Canadian economy is weak, I'm really waiting for this to start. Well, I'll just show you. Hold on. I'm really waiting for this to start coming up. Now, as it comes up, just because the economy is weak doesn't mean it can't come up. But this is the manipulation phase. All banks are doing is bringing it up to these points because that's now deemed to be the area of value to sell from, right? Now, what can also happen is if it doesn't go that way, if Canadian dollar is absolutely so dog shit, what can happen is this can then be deemed the best area to sell from. And how would you know that? Well, you'll see this happen. Right? It'll go like this. Markets will go, it'll break, test, boom, 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 boom. Then it'll come back around. Then it'll retest, and then it'll melt. Right? That's at this point, that's how you know that this has become the new area of value. Okay. There are many other things for it. I use all data things, blah blah blah, right? I use all this Gucci stuff to determine many different factors when the time comes, okay? But the Canadian dollar is weak. Just because you've decided to fucking draw a line like this on your page and be like, well, it's going to fly. Why is it going to fly? Oh, because look, it's down at the bottom. That means it's going to go up. Fuck off. You've lost your fucking mind. It's not how the markets work. A banker doesn't draw a line on his fucking page and say, I'm going to put $100 million on this one trade because I've drawn a line on my page. Okay? It's not how the world fucking works. Anyway, back to Canadian dollar. So Canadian dollar is absolutely shit, right? If you live in Canada, you would be as well buying stuff using chocolate buttons, okay? Because the Canadian dollar is fucked. And foreign securities purchases, blah, blah, blah. Core retail sales, shit, right? So we can all agree Canada's fucked. And it's not just this 1 week. You can look back. You can go back and back and back and back. And I do this every single week. So you'll be able to see, and here's the thing. See, when you cover this every single week, right? You build up this picture in your mind. Like, I don't even need to look at this today, and I can already tell you straight off the top of my head which currencies are weak, which ones are neutral that I'm waiting to see come into strong, which ones are neutral that I'm waiting to see push down into weak, and so on and so forth, right? I just know it all in my head because I do this every single day, and I update it every single week, and I cover it every single day as well. Excuse me. So let's have a look at next week. Let's see what we've got. Canada, monetary policy overnight rate, Bank of Canada press conference. Okay, so a couple of important pieces of information there, and we'll see what happens, right? So again, for the Canadian dollar is weak, i.e. the Canadian economy is weak. So that means the dollar is weak. So here's what happens, right? Bankers and all these big institutions, as I used to work for an institution, I used to trade for an institution, what happens is they will take data for each country. Like all of these numbers we're seeing, is it all doom and gloom? Is it all bad, bad, bad? Is it all getting worse, worse, worse? So the worse that economy's getting, the worse that all these numbers are getting, right? And I'm trying to explain this in very layman's terms so that I don't fry your head. So let's say all these numbers are getting worse, 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 worse. And we've now determined that Canadian dollar is bad, right? And then you look at the USA. And you're like, fucking hell, these numbers are all great. Everyone's expecting rate cuts, but that's not going to happen. Well, numbers are all good, right? So everyone's saying that we're looking at it. They're saying that we're going to have rate cuts and all this bullshit, but the numbers are all coming in good. My wife's doing my nut and she's noisy as fuck and she knows I'm recording. The numbers are all coming in good. So it's not going to cut, right? So what that essentially means is, on the left, you've got the US economy, which is fucking pulling out all the stops. Every time we think it's going to be down, it's up. Employment is up. Unemployment is down. What do you call it? The people's fucking sentiment about how the economy's going is up. You know, everyone's fucking happy about the economy and positive and all this. Housing is up, fucking building stats are up, manufacturing is up, you know, all these things are up. So you're like, fucking hell, USD's strong, right? It's the strongest economy in the world right now. And then you've got the Canadian economy, which is dog shit. So this is how banks look at it. The banker, or it doesn't have to be a bank, it can be a large institution, JP Morgan, it can be a large hedge fund, the private in London, whatever, right? But the big boys, they look at it and their job is to invest, you know, hundreds of millions of dollars, if not billions, depending on the size of the firm, right, into an economy / currency, which is going to yield them the highest possible returns, or the possibility of yielding them the highest returns with the least amount of risk, right? That's it. That's a fucking job. So when you look over here and you look at, oh, fucking hell, the USD's numbers are flying, everything's going great, economy's up, work's up, fucking average earnings are up, everything's just good, PMI's up, CPI's up, fucking PME's up, PCE's up, blah, blah, blah. Everything's fucking great, right? And then you look at the Canadian dollar and everything's totally fucking shit. What does that tell you? That tells you, and it tells them, that by putting your money into the USD, you're putting it in a place where it's the lower risk because everything's going well, and it has the potential to give you the highest return because everything's going fucking well. When you look to the right-hand side and you see the Canadian economy, that's high risk with the least possible amount of return. Why? Because everything's fucking shit. All their numbers are fucked. The economy is totally fucked. So if an economy is fucked, the currency is fucked. Do you see what I'm saying? So if you were doing USD CAD trade, do you know right away from just knowing these numbers, I'm looking for buys? Can you count? Is it going to come down at some point? Absolutely, because you get manipulation. You get the Bank of Canada stepping in, fucking trying to beat the wolves at their door, and that's what brings it down. But my point is that down on USD CAD, the bearish momentum on USD CAD is not the move. That's not the move. What's happening there is people are stepping in, Bank of Canada, blah, 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 and all the big institutions, when it gets to a certain peak point, and it's like, right, this is too high. It's not at an area of value for us to buy this right now. So what do? They start fucking cashing in. They can't just cash in everything because it would crash the fucking market. So they have to cash it in, like scaling out. You scale into trades, right? You also scale out of trades when you have a huge account like these guys. So they start scaling out, taking their profits. As they're taking their profits, no doubt retail traders are doing sales because they're fucking idiots and they don't understand basic economics, and it's coming down. What will happen is, as soon as that gets to an area of value, which I teach you how to find on our Discord, it will fucking fly from there. As long as, obviously, the numbers are still the same, as long as USD is still performing well, Canada's still performing shit, blah, blah, blah. Obviously, you need to be up to date with it all and keep painting that picture in your mind, but that's how it works. So what I'm saying is, even if it's up and USD CAD is coming down, yes, I know you can make money on the sales, but my point is that's the counter trend trade. That's the fool's trade. That's the fucking mugs trade. You don't want that trade. You want to be sitting here waiting. You always hear it, right? The money is made in the waiting and trading. You want to be sitting here waiting for that counter trend trade to come in. Just fucking wait. Once it hits your area of value, then you fucking hit it and you ride that roller coaster with the banks, right? The big institutions. I'm not trying to say, I trade like the banks. You know what I'm saying, right? You do ride it with the banks. And how I can show you that as well, if you come here. Let's have a look. Home. I give the example on USD Canadian dollar, right? Let's have a look. I haven't seen this, so you're seeing this at the same time that I'm seeing it. USD CAD. So COT is the commitment of traders, right? Commitment of traders. I explain it every video, but I explain it in every video also, so that it really hits home, no matter if you've watched this 20 fucking times. DXM right here is Dumb Money Index. That's retailers. This shows you where all the retail traders are positioned in this currency pair right now. USD CAD, they're all in sales. 77% of retailers are in sales. If you look down the bottom here on my screen, it tells you the statistics right there from this provider. 76.9% of all traders lose money with this provider. Okay? Retailers always lose their money because they don't know what they're doing. Let's have a look at COT. It could be the same. Oh, would you look at that? COT, this is all the banks, this is all the big institutions, the hedge funds, the JP Morgan, the Goldman Sachs, they're all in fucking buys. Now, yes, you can see that they are in sales as well. However, that's because these large institutions, they don't just go in one way like you or I, like buys or sells. They hedge, hence the name hedge funds. They'll put a specific portion long and a portion going short. And what they'll always have one which is more, so it'll be like 80-20, right? So they have a little bit of a safety buffer and blah, blah, blah. They're willing to risk that 20% that they know is potentially wrong, and that's how they hedge. I won't fucking cover hedging, but you get the point, right? But my point here, in kind of layman's terms, is all the banks are in fucking buys right now. Now let's have a look at USD CAD. Where are we? Look. So all the banks are in buys right now. What you're going to get is, what you'll probably get, we need to wait and see what data comes, right? The reason why you're getting this range is because the USD is ranging good data, bad data, good data, bad data. But look, it's still fucking buys, right? What you will get is retail traders say, look, it's rejected. Oh, it's going to fucking do this. It's going to do this, or it's going to melt. It could do that. It could absolutely range and come back down here. It could do that. But the point is, you don't want to be trading this. What you want to be buying it every time it fucking hits down here. That's when you want to be buying it, right? Right now, I would, even though I marked this up and I gave this trade to the guys in my group, if you want to take this, you can take it. I'm not taking it because it's a shit trade. If you want to take it, you can take it. Look, whoever took that in my group is now making money. However, look, this is the trade you want to wait for. What you probably see is you want to see it break past that, ignore, boom, retest, enter. This is your entry here, and then fuck off, right? That's your entry upon the break and the retest here. That's your entry. That's what you're waiting for. All this bullshit here, you're just ignoring it. Ignore. The banks are all in buys right now, right? Like I said, look, can that bend around and come back down here? Yes, it can. But that is the counter trend. That's the mugs game. That's not the real trade. The real trade is when it comes down here, you're buying it. That's the real trade. Or if it breaks above here, goes back down to retest, then you're lumping in and then you're going, right? But remember, you would, of course, again, check and make sure both economies are the same. USD strong, Canada weak, right? It's important. And then you're going to check what the fucking banks are in, right? So that you can be in line with them. So I hope that explains it. Let's have a look. Right. So we know Canada's shit. Let's have a look at next week. BOC monetary policy report, BOC sentiment, overnight rate, BOC credit. Okay. So yeah, we've got the Bank of Canada stuff. So we need to wait and see next week if the Bank of Canada intervene with stuff, right? So for me, Canada is weak. Now move on. Let's try and speed this up a bit. This takes ages, right? This is why most people don't do it, because most traders, retail traders that just trade from home, are lazy and they don't want to put this amount of work into their trades, and it's why they won't be consistently profitable in a large scale. I'm not saying you're not making money. You absolutely can be making money. What I'm saying is you aren't making money to the potential that you could be if you fucking knew this stuff, right? It's impossible. You just can't. You can't make the kind of money you can make by drawing fucking lines on your chart, right? And you don't have the confidence behind your trades because you're just trading like, oh, it's broke this stupid little fucking candle, it's going to go, and then it melts and goes the other way, and you're sitting there confused. Wow, that was going long. It already broke. Why is it going short? It's going short because one of them will be a fucking strong economy and one of them will be weak. That's why it's going short. And when you understand that, You don't enter stupid trades. You see what I'm saying? Right, so CHF is shit. I'm just putting CHF in neutral for me, guys. Don't worry, at the end, I will recap what all my pairs are at, okay? Euro, let's have a look. So this week, so when it comes to Euro, remember, we only really care about France and Germany, right? We do take into consideration Spain and Italy if it's like a year-on-year GDP thing and all this. Yeah, we do have a look at it, but like for manufacturing and services and all, we don't really give a shit about Italy and Spain. All we care about is Germany and France, okay? Industrial production, month for month, it's down. Remember, that's down because it was previously at 0, now it's at -6. It's green because they thought it was going to be -9. So it's came in better than expected, but it's still negative, right? It's still not good. Economic sentiment is not good. There we go. It's went from 51.3, which is good, down to 43.7, which is below 50. So that is massively bearish. German economic sentiment, 41.8, massively bearish. Final core CPI 2.9, that hasn't moved. Final core CPI hasn't moved. Final CPI, sorry, hasn't moved. 2.5. Main financing rate hasn't changed. Okay, so Euro for me is still, I think it was neutral last week, was it? Yes, it was. Euro for me is still neutral to weak. It's in between this kind of little limbo land of being neutral and weak. So I'm just going to put it in neutral because it's not weak enough, in my opinion, to put it in the weak category. Again, that's my opinion. So yeah, I've put that in neutral. Okay, let's see what we've got next week. You can see once you get past a couple of pairs and I start waffling on, we can get through this quite fast. I just like to explain stuff, right, so that you understand why we're doing this and you understand the effect of this information, okay? French flash manufacturing PMI. Yeah, so we've got loads of news next week for Euro news that we want to see. So French flash manufacturing PMI. Manufacturing PMI, we know, is roughly usually going to be below 50 because France is not a manufacturing country, okay? French services PMI, we would like to see above 50. If that also comes in below, like it's like the forecast, below 50, then it's bearish. It's not good for the euro. And just if these two come in and they're 50 or above, it doesn't instantly mean, oh, fuck, the whole euro is bullish. Well, you need to take into account the other factors, right, and piece it all together like a jigsaw puzzle. Just because you've got one slice of the jigsaw puzzle doesn't mean the whole jigsaw puzzle just instantly fits together, right? You still need to put all those pieces together until you see the final picture, right? It's exactly the same as this. German flash services. So Germany is, manufacturing. Germany is a manufacturing country, so it's very odd to see manufacturing being, fucking 43.5. That's crazy. And it's not a services country in particular. Of course, it has services, but it's not a predominantly services country. And that's, that's 50. So that's weird. So this is, see when you're getting lows and highs and chopping and changing, this is what you call mixed data. And that's why, personally, I'm putting euro in neutral and not in weak, because you do have a couple of good numbers here, right? So it's not overall weak, but it's also not overall strong. It's mixed data, and it's just kind of wishy-washy, right? Flash manufacturing PMI, yeah. So we've got good news. Well, who knows if it's good? We have got loads of news which we care about next week. All right. So let's move on. Next pair. GBP. Rightmove HPI. So this is like mortgage loan approvals, right? Why? It's month on month, so it has like the little. It's like when the news drops and you see the little move. It doesn't affect the overall trend, long or short. But like the month on month, I mean, obviously year on year does, but month on month doesn't. It gives you this kind of short movement. Why that's kind of important? It just lets you. It's not really important as an economic thing, but it lets you see how the economy is doing, right? If this is up and it's a positive number, It means more people are getting mortgages, i.e. getting loans from the bank. What are they doing with those loans? They're buying houses. That money is going back into the economy. If there's loads of people buying houses, that means loads of money is going into the economy, which means the economy is strong, the currency is strong, which means you're looking for an uptrend in pound, right? Obviously, you combine it all, not just one fucking thing, but you know what I'm saying. CPI year on year was good for the pound. Core CPI, good. PPI output month on month was less, but it's month on month. We don't really mind that. PPI output month on month down. RPI year on year is down by 0.1, which is okay. And it wouldn't have given you much of a move in the market. Why? Because it was already forecasted to be 2.9 and it came in at 2.9, so that's fine. HPI year on year is good. Claimant count change is good. So that's how many people are claiming unemployment benefits, right? How many people don't have a job and they're claiming money from the government to live. If you look here, it was 51.9 and now it's 32.3, which is fantastic because that means less people are claiming. Don't be put off by that being red and thinking, oh, that's negative. No, it's not. That's actually pretty positive. The reason why it's red is because they forecasted it to be 23.4. They forecasted it to be better than what it is, and it's came in worse than what they thought, but it's came in better than what it was, right? It's very important context that you have to bear in mind. So average earnings index, 3 month year on year. Okay, it's still very high earnings. 5.7 is still very high. It came down 0.2, but the average earnings overall is still very high. Unemployment rate hasn't changed. That's fine. Sales month on month is down. That's okay. So overall, pound is still strong for me, guys. The things that have come in weak, they're not enough to tip the scales on the other end for pound, right? Everything else, all the numbers that are coming in good for the pound are really strong fucking numbers, and they're making it do well, all right? Or maintain its strength. Next week, we've got flash manufacturing PMI, service PMI. So look, even if you look at the manufacturing, we're not a manufacturing country. And we were previously above 50, and it's forecasted to be 51.1, and we are not a manufacturing country. So the fact that that's above 50 in the first place, is fucking fantastic. Flash services PMI is 52.1, expected to be higher. So let's see what the numbers come in. Just because it's forecasted doesn't mean it's going to be. It could be less. Let's see. Just remember, anything from 50 up is bullish. 49.9 down is bearish. So if this comes in here and it's at 50.1, not 51.1, if it's at 50.1 or 50.2, yes, it's less than before and less than forecasted, but it's still bullish for the economy overall. Yes, you might see an initial little pullback, but that is just a pullback. The economy will then push up after it and do the real move, right? Same as services PMI. If this comes in at 50.3 and it's less than before, it's still bullish. It only starts to sway bearish when it gets to 49.9 and below. Okay, very important that you understand that. So yeah, pound is strong. Japanese yen, I don't know why we even bother. We know it's shit, but let's look anyway. Industry activity down month on month. Trade balance down. National core CPI, it's up slightly, but it's 2.6. Those numbers are still pretty dog shit, okay? Next week, we have got flash manufacturing PMI. This will be good because it is a manufacturing country, right? It's a manufacturing economy. SPPI year on year, we want to see that. Tokyo core CPI year on year, we want to see that. So next week is going to be quite a big week for the Japanese yen. As it stands right now, Japanese yen is weak, has been weak for months, if not years, as you can see on the charts. When you see this bullshit, wait, I'll show you. I'll go to a lower time frame. Sorry for all my lines. These are lessons. This right here, this is the main area you want to buy GG from, all right? If you're not part of my group, you can screenshot this now. Wait till GG hits here. Buy from here. and it'll fly. You're welcome. When you see this, when you see all this bullshit here, that's just the Bank of Japan. One, it's the Bank of Japan, doing shit, selling bonds and all this manipulation behind the scenes to try and help their economy out because they're so fucked. And it's obviously the big institutions taking profits because they're like, right, it's way, 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 way not overbought, overvalued, right? Very big fucking difference. Overbought is bullshit. Overvalued is a real thing. So they just need it to come down. It's this area right here is the main bad boy. So can you make money doing counter trend trades from here down to here? Of course you can. That's fucking hundreds of pips there. Am I going to bother? Am I fuck? I'm just sitting here like a sniper waiting for it to hit my zones. I will take a trade if it comes here and shows me signs that it ain't coming any further down. And then the main trade is right here because this is where all the volume kicked in, right? If you want a little trick here, you can use this fixed range volume profile. Here is the second area of value up here on the lower time frames. And then let's see, because I trade on the higher time frames, let's have a look. Give me 1 second. You can do it again. I'm sure this is our main area. There we go. This is my main area because I do the higher time frames, right? So this right here is where all the volume kicked in. If you check these as well, this will show you where the volume kicked in. If I show, where is it? Oh, that's oil. I'll show you on here. You can check volume, and this will show you where the volume kicked in. There you go. Look, boom. This one was obviously for USD Canadian dollar, right? This red line here is exactly the same as this yellow line here when you use this tool, fixed range volume profile. If you don't have this Gucci piece of equipment to tell you that, you can use it on TradingView. Okay, here it is. It's called the fixed range volume profile. All you do is click it, drag it from the previous low to the new high, and it will tell you where the volume kicked in, where all the banks lumped in their money. The area where all the banks lumped in their money is here. So what you will find is that has been deemed the bank's area of value to buy from. How do we know that? Because that's where they lumped in. Why did they lump in? Because they believed that was good value. It's fucking simple, right? When you use a little bit of logic. Yeah, that's it. Let's see what next week brings for Japanese yen. This is important news next week for the Japanese yen. All right. Last, but by no means least, the USD. So, manufacturing index for the Empire State minus 6.6, so it is getting worse. Core retail sales month on month better. Retail sales okay, not better, but they're okay. Import prices down. Building permits up. That's positive. Housing starts up. Industrial production. Still decent numbers, slightly less, but still decent. Capacity utilization rate is up. Crude oil was better than expected. Unemployment claims. Unemployment is up. So that's negative. Index is massively up. CB leading index down. Natural gas storage. Okay, so that right there is what you call mixed data, right? Now, that's not going to affect the USD. The USD is still the number one economy right now in the world. That's why you're getting all this USD strength. Is it almost, about to burst its bubble? Well, nobody knows, right? Everyone's speculating that. Everyone thinks it's going to get rate cuts this month, or it's going to be rate cuts in September. You only see rate cuts when all the numbers start coming in bad consistently. So if they were bad this month, you wouldn't get rate cuts unless they were like bad again next month, right? And it's like, oh, right, the US is really in a bad way. Because it could be bad this month and it's just a bad month, right? And then it could be fucking fantastic next month, which means, oh, we still can't cut rates because everything's still too good, right? So you need context. Just because it's bad, like when the first time you look at it, you never ever trade news by news, right? You get the news and you push it all together into this big giant puzzle, and you need to combine all the different aspects. Context, I guess, is the word I'm looking for. You need to apply context to it all, right? and understand it on a much larger scale, okay? And your trading will fucking improve tenfold, like you wouldn't believe, once you understand fundamentals. I'm telling you, I never used to bother with fundamentals. I knew them, but I used to fuck them off. I never knew them at any great detail. I went and done a course with my mate Dan Emerson. He is on the ball. He squared me away, and it was the best course in fundamentals I've ever done. And since I have done that, even though I was consistently profitable for years with a track record, by the way, my everything's just went tenfold for me. Like, so much better, 10 times better. My track record's better. My trades that I'm choosing are better. I'm actually risking less per trade and I'm making more. It's fucking phenomenal. That's because I now understand the economics of it. I now have that confidence to just keep, as long as the news doesn't change and make one country weak, which was strong, one strong, which was weak, as long as both of them remain the same, strong and weak, and they don't change, you can just let that trade run, because when you get the pullbacks, that's just the manipulation phase, and the bank's taking profit, and then they're going to lump back in. So when they lump in, you can lump back in, and away you go. It's phenomenal, guys. It changes the whole thing for you, I'm telling you. Next week, USD. Right, we've got loads of news. We've got flash manufacturing PMI, services PMI. That's a big one. So next Wednesday. Advanced GDP. Yep. Unemployment claims. We like that. Advanced GDP price. Core durable goods. Yep. Core PCE. Yeah. So most of them are monthly or quarterly, but we still want to see them, right? So yeah, next week is we've got quite a lot of news for USD. So my pairs are as such: strong Aussie dollar, pound USD, weak New Zealand dollar, Canadian dollar, Japanese yen, neutral Swiss franc and euro. Okay, that is my pair. So all you do is you just match up these pairs to these, and then you make sure that you can trade them, like GJ. You ain't going to trade GJ yet, but you know that it's buys, right? So now you're just waiting until it hits here. Then you're going to enter, and then you're going to take it up. That's what you're doing. You're just waiting here like a sniper, right? That's all you're doing. Now I'm going to mark up the charts for my guys. This is what I do every single week. So I mark my charts up predominantly on the weekly. Now, if the weekly is miles away, look, I already done this ages ago. If the weekly is miles away, then at times, dependent, I do jump down to the daily and 4 hour and blah, 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 but they're all dependent, right? What I really want to see now is obviously this. Boom, boom. This could, wait there. This could very well come to here, of course. It could do this right there. It could very well come down. Boom, 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 right? It could do any of that. The point is, once you know how to trade from the areas of value, right? Insanely important areas of value. Then once you've marked them up like this, right? Anything that the market does outside of your main target area, you don't touch it. It means that you avoid FOMO, fear of missing out. You avoid jumping into stupid fucking trades, chasing it up here, chasing it down here, chasing it back up, chasing it back down, chasing it back up. It's just all bollocks. Wait until it hits the area, enter the trade, stop loss above, let the fucking thing run, right? So I've already marked this up. I think I've marked up most of them, to be honest. This is just me showing the guys what they're looking for. But yeah, I ain't touching this until it comes up here. Reject here, and then away we go, right? So I already know there's nothing for me to trade there. AUD Japanese yen, nothing for me to trade there. AUD Aussie USD. So why wouldn't I be trading this right now? Can you think about what we've just discussed? Why would I not be trading this? And better still, why are you seeing it just ranging Why are you seeing it just ranging like this? Like boom, 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 boom. It's not doing anything. It's just in a range, right? Why? What have we just discussed? The US economy is strong, and now the Aussie economy is strong. So it's just ranging. You're trading. This is what happens when you try to trade a strong on strong, a neutral on neutral, a weak on weak. You just get ranges. Why bother, right? Euro AUD. So Euro AUD is a strong against a neutral. So I'm not interested in trading that. Can you trade that from here down to here? You know, if it breaks here, goes back up, melts. Yes, you can. I'm not touching it. Right. The only trade from if it comes here, I'm not touching it. If it comes here, I'm not touching it. If it, let me just grab this. There we go. If it breaks below, goes back up for the retest, I would enter here and take it down here. Yes, I would, because at that point, that's a good trade. Okay, right now it's high risk, low probability. When it comes down here, it's high probability, low risk. Right. Of course, as long as the economic data is still the same. All right, it's still in favour. EuroCAD, yeah, one's shit and one's neutral, so I wouldn't trade it. Euro CHF, both of them are neutral, so I wouldn't trade it. That's why you're seeing just dog shit moves. I would only look to sell this if it comes here or comes here. Anything outside of this, I'm not touching this market. I don't give a shit about touching it, right? Euro GBP, absolutely dog shit. Look, I'll show you. It's just a big stinking range. Why? Look at that. Why would you trade that? It's absolutely shit. However, if we jump down, you'll see that I did give that trade to the guys. I said, look, I've done this weeks ago. I said, look, if this breaks here, it'll come up retest. That's your entry. I drew it here. Here's the little box that I put. I just moved that over to the side because every time I was teaching lessons and trying to show the guys stuff, look, it kept flashing and it kept fucking annoying me. So that's why I moved it away to the side, right? But that's it. If I never took this trade, and I told the guys, I'm not taking this trade because it's a shit trade. It's euro against pound. It's dog shit. However, it's a good. If you want to make some money and you don't care about taking shit trades, you can take a shit trade and make money. And obviously, whoever copied that trade in my group did make money. Euro USD. Again, look, it is a trade from here. Beautiful area of value. You can even drag that up there if you wished. Beautiful area of value. Melt. You probably you'll probably see this melt. So it's obviously going to be. You'll see big moves coming in, right? If the euro numbers come in really poor, and or not even really poor, just poor, and USD comes in strong again, that will be the catalyst for this to absolutely melt here, right? I'm not trading it because it's a shit pair. Look, it's just a big range. I don't trade ranges. I only trade strong against weak, and this one is strong against neutral. So I'm not going to bother. I always stick to my rules, which most of you fuckers won't, and that's why you'll go through phases of fucking hell, I'm making great money, this is amazing, and then you fucking blow it all because you don't pay attention to your own fucking rules, right? What's this? Euro? Yeah, I ain't touching it. But again, it's the same drills, right, lads? Look, let's have a look. Let's see where the volume kicked in. Right, so volume is here. That is 157545. Out of curiosity, let's just see what this says. That was Euro Japanese yen, right? Volume 158227, which is in the daily. So the volume kicked in here 158230. 158230. What have we got here? 157. So that's fine. That'll show. I'll just type in 158230. We can see the difference, right? Sorry. 158230. Look at the difference. Look, right? So you see what I'm saying? You don't need this. If you don't want to pay for this Gucci fucking equipment that does it all for you, you have a tool which does all of this for you on TradingView, and it's free, right? It's called the Fixed Range Volume Profile. It's fucking phenomenal. And it showed you where the volume kicked in, which is right here. So what does that tell me? Wait, I'll get rid of some of these boxes. These boxes are just here because obviously I'm teaching people and I'll be drawing up lines and blah blah blah. So you really just want to be doing that, right? Let's get rid of this fucking thing. I would even go a step ahead and clear this. There we go. So there's what you're looking for. So basically all that means to me is when Euro Japanese yen gets down here, that's when I want to be looking to buy it, right? And not a minute before. Look, we can clear that up. There we go. So what I'll do is I'll clean that up on the weekly. I will put that right here. There we go. Bosh, right? That's all I'm waiting for now in the weekly. I'm waiting for Euro Japanese yen to reach here, then I'm buying it, and away it goes. That's it. Anything this market does outside of this fucking box, I do not care, right? I don't care about it. And it stops you entering stupid trades. Euro NZD. This is one that I gave it to the group if anyone wanted it. Look, you can see it had marked up weeks ago. I didn't take it. Why? Because it's neutral against weak, and I don't trade that. I only trade strong against weak. That's it. I don't break those fucking rules. GBP AUD is strong against strong. What you're seeing here, a range, right? It's been ranging since May 2023. Yeah, it's going up and down, but overall it's a range, right? You haven't made any big money like this. This is what you want to catch. This bullshit here, you don't want to be catching that. That's fucking terrible. GBP CAD. Pound is strong, CAD is weak. Look, well, there's one. I already fucking done it. There you go. There you go. That was the one that I gave to the guys. That was a trade that I'd give to the lads. And that's it. The reason why it moved up, remember I was saying when it ranges, like if I drag this across, right? When it ranges, you don't want to be trading that range. What you want to be doing is if it breaks above, you want to wait for the retest, enter, then away you go. That's your entry. I think it was one of these, right? Now there it is again. That was it. Look. There it is. The same thing fucking happened there. I can't remember where I showed it, lads, but you know what I mean. I already showed you where it would be. There we go. That was it. So you want to wait for it to break, retest. That's your entry. Sell, right? Anything really outside of that, I really don't care, all right? What were we on there? Pound Aussie. That's strong on strong. So even though, look, I marked up this chart here, I didn't take the trade because it's strong on strong. Pound Canadian, that came in. Pound CHF, that's strong on neutral, so I didn't take that, but I did have this marked up down here. You can see, like, boom, away we go. One of the guys did take it. One of our lads, Mel, took it. GJ, so I don't care what GJ does until it hits down here. That's it. I only care about GJ hitting this one line. That is it. GBP NZD, that came in, but I never took it. I would have taken this. I was waiting for it to pull back and retest this area here, but the pound was so strong and the NZD was so dog shit, it didn't even retest. It just absolutely fucking flew. I did have this marked up. If you look at my older videos, you'll see it, but I didn't take it because I was waiting for that retest. There we go. There's another one. Look, GBP USD. So let's see what it does. But I wouldn't take this again. If you want to take it, you can take it. But it's strong on strong, right? I don't fucking trade strong on strong. I trade strong against weak, right? That's it. NZD USD. You would take this. So NZD USD will be sells, which it is sells. Look, broke away. Boom. Let's have a look. Overall, yeah, we'd need to see another retest. I know there's got buys that I would never be buys in a million fucking years. That was me just showing examples of what can happen in the market, right? It could come up and retest this zone and then melt. So this could be a good area of value here. What you probably see on the lower time frames is, if we drag this out, this is the break and first retest, right? What you'll find, and you can save this video if you want, it'll probably go like this. Bang, 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 like that, right? It may do that. So I'm going to remove this now because it just looks messy, but you get the point, right? of what we're looking for. So the next time I'll be trading this is when it swings away around, comes back up, retests here, then I'll be taking it for a sell at that point. Until that point, I'm just leaving it, right? I'm not touching it. NZD CAD, both of them are dog shit, so you wouldn't trade them. That's week on week. And look, this is what happens. Just this big, massive, stupid range. Pointless. But you can see it still comes in. Once the market gets to an area of value, it fucking goes, right? And these are already marked up. I just didn't take them because they're week on week. There are many people in the group that do take them, though, because they're still trying to find their feet, right? They're still trying to find, oh, do I like taking counter trends? Do I like just taking every fucking trade that goes? Because some people do, right? I don't. I'm very, very selective of the trades that I take. And I just take the ones that I'm like, bang, fucking lights out all day long. There you go. Look, broke, retest, away it goes. But that is weak against neutral, so not the best. Yeah, it's USD CAD. So we're back to square one. So, lads, there's literally nothing, again, that I'm really looking at right now currency-wise. It's all dog shit. The only thing that is in my vision right now is this. Bish, bash, bosh. That is going to be a trade and a half when it comes in. We already caught this from here to here, I think we caught, and then we caught from here to here because it stopped us out at break. We took money, it stopped us. This stopped us out at break even, the little shit. We caught it from here to here. Some of the lads caught it from here to here. I missed that one, and then I caught it from here. I got out down here, about $5.5 grand, and you can see it's melted. So that would have been about a 15, maybe even like a 17 grand trade for me. If it hits down here, it would have been about a 25 grand trade for me. But yeah, it's fine. I mean, $5.5 grand's fine, right? You win some, you lose some. That's it. The main trade. I'm not going to enter this now, even though I'm waiting for it to come back down here. And I'm not going to re-enter this. I'm just going to let it play out and hit this area here. Once it hits this area here or here, but I'll really keep my eyes open here. I'm looking for the retest, reject, and away it goes. And then we're going to enter buys. Our stop loss is going to be below here, below these previous lows. Okay. And that's it, lads. Been going on for an hour now. I hope that was informative. I do try and keep these videos as short as possible. That is as short as possible because as we're covering the news, I could have went into great detail on a million things, right? And there's just so much to cover. But the reason why many people don't want to do fundamentals, you can see how much work is involved, right? There's fucking loads of work involved. So what I do, if I'm going to take a trade, I do this on a Sunday, right? So let's just say, let's just say a pair, USD Canadian dollar. Let's just say in this example, it was coming to my area. I would then come across and check the terminal, USD CAD, right? What are we doing? Our retailers. So if let's say I'm looking for buys, right? I want to check if I see retailers are all in sales. I'm like, happy days. That's one tick in the box, right? Then you want to check the banks and the big institutions. They're all in buys. Happy days. Sometimes you check it, retailers will be in sales and the banks will be in sales, and that's fine, right? It's just the markets. But it's all these little tick in the boxes. When you see that one economy is strong, one economy is weak, okay, now I know that I want to look at that pair, right? Now that's giving me the pair that I want to trade. You're not just trading GG because it gives big moves. Shut up, you fucking nutter. You want to choose a pair, not because it gives fucking big moves. You want to choose a pair because one economy is fucking strong, one economy is fucking weak. That's it. That's fucking it. For the examples I gave in the beginning of the video. Now, after fundamental stuff, you then want to look at what's called data. And you can check it on platforms like this, Prime Market Terminal. I will put the link below the video if you want to go and check it out. It's a fantastic platform. Don't get bogged down with seeing all these numbers and stuff and all these lines and thinking, fucking hell, my brain is fried. You don't use fucking 95% of this. You just use the basics, right? The reason why it has so much on it is because actually those big institutions use this as well, right? And the reason why it has so much on it is because you have so many different types of traders, and everybody will have their own set of things that they look for, Like if you want to follow my method, you can follow it, and I will guarantee you that if you're like, fuck, this is good, you will still change my method to best suit your personality and best suit other things. Like, I trade on the daily, weekly, and the 4 hour, right? You might hate that. You can 100% use my strategy on the 4 hour, the 1 hour, the 30 minute. You can use it in all of the time frames. It works on every single time frame. I swear to God. So the guy that taught me how to trade when I was back in the company, I don't trade anything like him. Like, we are polar opposites. I do not trade anything like him now, right? And you will find that as well. There are a million ways to trade. I am not saying my way of trading is the holy grail. I'm just sharing with you. It fucking works very, very well for me, to the point that I'm also trading other brokerages' PAM accounts, right? And I've been doing that for years. This is now my 9th year of doing that. First 4 years was for the company, and the remainder has been doing PAMs. So that works for me. I'm not saying you have to follow that. You know, there are a million ways to trade. You do whatever works for you. I'm not saying change it. I'm just saying, if you would like to learn more in-depth stuff and sharpen your tools and get extra golden nuggets, we will teach you. And we have a Discord group here. And I'll just show you. Where are we? General chat is where we do general chat stuff. We are now just sponsored the football team. We have a laugh in here, but mostly we give. So Lee, my business partner, he gives scalp trades. So pretty much every single day, Lee will give like 1 to 2 scalp trades every day. So you can make money on these pretty much each time. And you will see, look, let's have a look at trade results. Here it's all here, look. Took gold, 51 quid. It's a small account. Jevons is just practicing. He's doing well, but he's just practicing. Of course, he's a new member. 19 Pats, 278. These are all the trades that we give, guys, that you can copy. 54 Pats again, 206. Alex, 314. 425. These are each trade, by the way. This is not like per week or these. This is per trade. These guys are making this. That's my oil one, 5.5 grand. Would have been about 15 or 17 grand by now, but that's fine. I mean, you're still going to be happy with 5.5 grand in one trade, right? It's lovely. And that's it, guys, right? We've got everything you need here. We've got beginner videos, swing trade education, where I have honed down my method into 6 videos for you. We do daily mentorship. I do one-to-one live sessions, and every single trade that I personally take on my live account, on my managed account, I do it all live. So you just jump on here, like you can see right here, on the Discord. The guys jump on live, and you can physically watch my screen, and you can watch me trade the account. You can talk to me. I don't mute you. I don't, put everyone in mute so you can't say anything. Sit there and shut up. Not at all. You can ask me any questions you want. Like, why are you taking that trade? What was the lead up to you saying, okay, I'm now going to take this trade, guys? And I will explain everything to you. I will explain, why is your entry area there? How did you know to put that box there? And how did you know it was going to reject? Well, of course, nobody knows, right? Nobody ever knows, but there will be reasons why it has a high probability of coming to that level, which is called areas of value, blah, 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 and reasons why it has worked out. Why it's went a certain way will be economic, based on data that's come out in the news and blah, 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 right? So I will explain everything and why it's actually happening so that you can build up your confidence when you enter a trade. All right. We give away an entire month completely free in our premium Discord group. Okay. Completely free. After that, we charge £97 a month. We do not charge any extra money for one-to-ones, for mentorship. It's all included in the £97 a month. You can come on first, see if we're fucking bullshitters or not, because I know there's a lot of bullshitters out there, right? That's why we say to you, come and join us for a month free. What more would you like us to do, right? And at the end of that month, if you think, fucking hell, I've actually got a lot of good winning trades here, I'm actually learning something, and I want to stay with these guys, then you can join us for 97 quid a month, all right? And if not, you just simply hit cancel subscription, and it will cancel, and it will not charge you going forward. But you're perfectly entitled to have that free month. All right, lads. I'm Ryan Mack. This is The Trading Guys. I hope you found that useful. Have a great weekend. See you later. Take care.